Guys, are you looking to build more income in your lifestyle for 2025 and beyond? In this video, I'm going to show you exactly how you could start from $0 and learn how you could day trade to make yourself income here in 2025 and beyond. Guys, if you like this video, hit the like button, hit that subscribe button because this is going to be so beneficial for you and so helpful for you as a beginner starting out to learn day trading. So with that being said, let's go ahead and jump right in here. See you on the flip side. All right, guys, so the first step to actually learn and start day trading is by evaluating the markets. So for the platform, we're going to go ahead and use TradingView, okay? There's multiple platforms you could use, but I'm going to go ahead and type in TradingView. And right when you type in that, let's go ahead and click the first link here. And here we go. We're inside TradingView. Let's go ahead and go down to products and super charts, press that, and boom, you're right in the charts. I know this looks a lot of confused, like a whole lot of confusion here, but I'm going to go ahead and show you step by step exactly all this means, okay? At the end of the video, by the time we reach the middle to the end of the video, you're going to understand this whole layout, okay? So usually it brings you to Apple or some famous stock, okay? This shows a stock, so it shows the markets going up and down. Okay, this is the first thing you're gonna see in your charts is candlesticks, and right here we have other stocks slash pairs. Okay, these are pairs right here that we could go to that toggle to different stocks. As you can see how the stock changes because we're on another stock. Okay, this is our watch list, and right here, if you could see, you have where price is right now, and it shows you markets open here and all kinds of good stuff in here. You know, the seasonal charts, all kinds of stuff. The best thing you can do, just get comfortable with this right here. But for this case, I'm going to go ahead and do this just so it doesn't make you too confused. Right here on the left, we have all these tools, guys. We have these tools. We have a drawing tool. Okay, right here, we have this tool right here. This is called the Fibonacci. We have this tool, pretty cool stuff here. So these are just all tools here. You can even put a little emoji, boom, pretty cool stuff. But anyway, this is your tools section of your toolbar. Right here we have the time frames. So each stock, guys, really quick, is built off of time frames. So what you're looking at right now, we're on the 1 minute time frame. As you can see, this right here is blue. If we go on the 2 minute time frame, the whole stock market changes, right? It looks like a completely different stock, but really it's just on a higher time frame. Okay, again, I don't want you to get too confused, but if we look closely here, these are called candlesticks. Okay, these candlesticks are made every 1 minute. See right here, Monday, March. If you look down here where my cursor is, Monday, March 24th, 9:45 a.m. So this candle is born right when 9:45 a.m. starts, then it closes at 9:46, basically. At 9:46, this one's made, okay? 9:47, this one's made. Look at, see? These are all made off of 1 minute, if that makes sense. If we go on the 2 minute, what does that mean? Well, look down the cursor again, down here. Well, this candle right here, 8:58 a.m., okay? 9 o'clock a.m. See how it's going based off 2 minute intervals? So this is off of 2 minutes. 9:02, 9:04, 9:06. If we go on 5 minute, well, look down again. Monday, March 24th, 6:35 a.m. Well, next candle, 6:40 a.m. So this is all based off of 5 minute candlesticks now. So let's go back down in the 1 minute really quick. So these candlesticks, all these little blue lines and blue boxes slash black boxes with the lines right here, guys, this is all called candlesticks, and this is based off of 1 minute because we're on the 1 minute time frame. If we go on the 5 minute, these are all based off 5 minutes now. The candlesticks change based off what time you're in, if that makes sense. If we right click, you could buy and sell here strictly from right here or from these two buttons here. So when it comes to trading, there's two types of orders, okay? So of course you're going for, you could do a sell and you could do a buy. If I would go ahead and want to buy a stock, right? Let me go ahead and just replay this just for education purposes. Okay, so say if the stock's right here, say if it's Tuesday, March 18th at 9 o'clock a.m., right? The stock's right here, and I want to go ahead and buy, right here. So we press a buy. It's going to go ahead and buy the market, right? So you see how we're gaining money when the stock goes up, but when it goes down, we're losing money. Exactly what it is, right? See, and then you can always sell at a higher price, right, to gain a profit. So a buy position, guys, when you're buying the market, you want to go ahead and buy low and sell high. When you're going to sell the market, if you want to make money when the stock market goes down, well, you can. So say if we're on up here somewhere, right? Say right here, it is Monday, March 17th, 12 o'clock p.m., right? I want to sell right here, right? So I can make a profit when the market moves down, right? Let's see what happens. So let's just say an hour goes by later. Boom. So you see how price goes up. Whenever price goes up, then we lose money because we're selling the market. We can make money and make a profit when the stock goes down. So there's two types of orders here. There's a buy and a sell. This tool right here is called our position tool. So if I select this one, this is called a long position and a short position. Okay, so which one's buy and sell? Well, buy is always referred to a long position. So if you want to buy the market, you want to go ahead and select the long tool. If you want to sell the market, you're going to go ahead and select the short position, because selling is and trading is called shorts. So if you want to sell the market, you're going for shorts. So I want to buy the market, right? So say if I buy here, this is our entry. This middle line here is our entry. So this would be our stops, okay? And this would be our targets. So when it comes to trading, you want to have two things when you place a trade. You want to have a stop loss and a take profit. So a stop loss, right, is going to show you that price stop you out, right? Meaning if price reaches down to this level here, right, or say if you buy the stock up here and your stop's down here, price comes down, hits a stop, you lose your money and you're out, okay? And right here, this is your targets. So your targets, you can put your targets right here. So say if my stop's down here and price moves down, then up, and it hits our take profit, that means we're out of the trade. It automatically closes our trade and it takes the profit that we made. Okay, pretty simple. Two simple things right there. So we have that buy position and sell position. All right, so now you know the positions. I want to show you here how to read candlesticks. So when it comes to reading a candlesticks, guys, what I want to show you here, these candlesticks, they're gonna be different for you. They're gonna be red and green when you first hop on TradingView, but in my circumstance, it's blue and black. Just for your sake, I don't want you to get too confused. So I'm gonna go ahead and change mine back. Okay, so we have red candles and we have green. So when it comes to learning the stock market, you want to understand what these candlesticks tell you. So if we go ahead and look at a nice green candle, all right, so I'm going to zoom in here. I want you to just focus on this candle. I'm going to highlight this area, this candle only. I want you to focus on this candle here. And the reason why is because these candlesticks always tell you something, okay? We're on the 1 hour time frame. Before we start analyzing this candlestick here, we're going to be in the 1 hour time frame for this. On the 1 hour time frame, if we look here at the time on the bottom left again, March 17th, 10 o'clock a.m., right here, this candlestick is based off 1 hour. So right when 10 o'clock happens, right when it's 10 o'clock a.m., this candlestick is born. Price opened and closed. After 11 o'clock, right when 11 o'clock hits, this candle is closed and this one is born. Okay, and the next candle is born and so on. Price always going to open on the bottom left for a green candle. Okay, So when it comes to identifying these candlesticks, we want to understand that this green candle, first of all, is green. What does that indicate? Well, a green candlestick indicates that the price goes upwards. So this is going to indicate to you that it's a green candle. Okay, so really quick, let's look at this candle now. I'm going to highlight just the red one. Okay, what does this indicate to you? Any guesses? Well, this one is red. Why is it red? Well, it's red because what does that indicate? Well, market goes down instead of going up. The market did not go up here because it's red. The red candle goes down always. Okay, so these red candles are always going to be going down. All right, pretty simple. And so when it comes to identifying these candlesticks, not only this one went up and this one went down, but if we go back to this candle, there's always an open and a close. So each candlestick, remember, it's based off of what? Based off a time frame. Right when 10 o'clock happens, the market for the green candle, right, it's going to open always in the bottom left if it's a green candle, okay? And then after the 10 o'clock a.m. candle is up, so right after 10:59, this one closes here. 11 o'clock a.m., this one opens here. Okay, so it closes here. So what does that tell you? Well, it's a green candle, 10 o'clock a.m. Bottom left, it opens here. Top right, it closes here at 11 o'clock a.m. So this little icon here, two candles, it actually shows you here what you guys want to look at. So if I select bars, see how these candlesticks instantly change? Well, these will hint you when the market opens and closes. So if we go right here on the 10 o'clock candle that we highlighted, so you see this little line here? This is where the market opened, right when this candle was born. And then this one on the top right is where the candle was done, right, forming. These are bars, so it's only going to show you the lines. So basically what it does, it kind of highlights this area here and makes a candlestick. So that's why it looks like that. What the heck does these little black little small lines indicate? Well, why are they called candlesticks? Well, because they look like they have a little string in them, right? So these indicate what price did during the 1 hour candlestick, if that makes sense. So price opened here during the 10 o'clock, and price must have come down to the low of this stringy part during the 1 hour, came up to this high, came down, and right here it closed right when the 11 o'clock a.m. was up, right? Then wherever it is, whatever price is at 11 o'clock a.m. here, right, on this candlestick, it closes, and this one's made at 11. So right here, we have this red candle, okay? So it's 12 o'clock p.m., Monday, March 17th here. For this candle, price opened on the top left. Why? Because the market went down. So the market went down. So this is their open here, and it closed here because the market went down. Okay, if we go on the bars, the market opened here, and the market closed here. Okay, so pretty simple. It just kind of highlights that and actually shows you it's a candlestick. Okay, and remember, what do the wicks tell you? Well, the wicks tell you what price did during the what? The 1 hour time frame. So price opened up here. Price must have come up here during the 1 hour. Price came up to this high, came down to this low, little stringy part, then came up a little bit and closed right here. Okay, 3 things you must need in trading. Okay, so you want to, of course, have a strategy. Okay, so when it comes to having a strategy, right, you want to have a specific strategy in the markets so that you could have an advantage, right? Because trading, guys, a lot of people think trading is gambling, but it's really not unless you have a strategy, okay? And these other 2 things. So when it comes to having a strategy, really quick, if we go back to these candlesticks, if we go ahead and select indicators here, you actually have a lot of indicators you could actually look up and choose from, right? So if I could go ahead and select this, it kind of shows you, indicators kind of give you an idea of what the market's gonna sort of do, because it gives you confluences in your trading. So once you understand candlesticks, learning when they're opening and close, which you just learned, right? You want to add confluences. So you want to have, okay, cool, this candle closed down here, okay? And then price came up, closed above this. What does this mean? Well, I could go ahead and probably press buy here, maybe, right? And maybe only target to here, right? Which it works, right? This is called a strategy. You got to have a set of rules, okay? When it comes to trading, though, especially with indicators, you can never always win, okay? Every time. There's always going to be losses in trading. Just understand that, you guys. You're never going to always 100% win in trading. And it's all about being profitable, okay? That's your first step, is become profitable, okay? And becoming profitable, basically what I mean is have a set strategy where you have confluences in your trading, right? Have multiple confluences in your trading so that you could actually leverage a strategy, right? Rather than people just throwing money in these markets and just gambling. It's not gambling unless you make it. But the thing though is that when you have a bunch of confluences lined up in your trading, reasons why you're going to enter a trade because of your strategy, well, that's when you're going to win. But you're not going to win every single time, but you're going to be making money over time because of consistency. So when it comes to trading, not only you want a strategy, but you got to have consistency. Okay? When it comes to being consistent, right? And trading is where success happens. And the reason why success happens when you have consistency is because with your strategy aligned with consistency every day will bring you success in trading. And when it comes to consistency, not only just focusing on your strategy will align you to success, but also your daily routine. When it comes to trading, you want to have a nice daily routine. What time do I need to hop on the markets? What time do I need to actually, well, there's multiple times to trade. And when it comes to trading, right, there's different sessions in trading. I'm going to go back in indicators. And if I look up here, trading sessions, okay, right here, it's going to show you all the sessions. I know it looks kind of confusing, but it's dropped down to some lower time frame. Okay, so now remember we dropped down to 1 minute. These are all based off 1 minute candles now. This is what's going to show you right here. All right, so 5 o'clock Sunday, if you look in the bottom left, 5 o'clock on Sunday, March 23rd, right? This is where Tokyo session starts. So 5 o'clock p.m. Pacific time, okay? 11 o'clock Pacific time, Tokyo is from. So this is one session, right? London session is from 1:30 a.m. all the way to what? All the way to 9:30 a.m. New York, 6:30 a.m. Pacific time. The price basically moves, guys, in sessions too. And when it comes to starting out as a day trader and actually learning these sessions, the first session is Tokyo, the second one is London, and the third one is New York. New York session is definitely the most popular to trade. So if I were you, I would only look for trades in London session and New York session, okay? There's a thing called in trading, it's called price action. Price action means what price is the most cleanest, right? How price is clean and how price moves, right? So if we have clean, nice moves in the stock market here, we have good price action, okay? So when it comes to having your strategy and consistency, trading, the last thing you need is risk management. And the reason why you need risk management and what that means is when you have a strategy and when you stay consistent as well as have discipline, right? What time are you going to trade? When, what do I need in my strategy so for it to align to take a trade, right? That's exactly when risk management comes into play. When you have those two things, when you have your strategy, when you have your consistency, you need to have proper risk management. A lot of people fail at this one is because they have bad risk management. So when they have an account balance worth of $100, right? So let's type in $100. You have an account worth $100. Okay. How much do you need to risk a trade? 1 to 2% a trade. Okay. So 1 to 2% a trade. Risk a trade. Okay. What is that? Well, you can only risk $2, right, per trade of your $100 account balance, $1,000 account balance. Okay. How much can you risk? Well, you could risk $20 a trade. Okay. If you have a $10,000 account balance, you could risk $200 a trade maximum. Okay. Get it? Pretty simple. All right. But when it comes to risking a trade, you guys want to understand risk reward. I want to go ahead and see, right? Hover over this tool here, and it shows you risk/reward ratio. It's going to show you a 1. What does that mean? Well, my stops are down here. My take profits are up here. So this is called a 1-to-1 risk-reward ratio. If I increase this take profit up to maybe here, this level, right? What does this show us now? Well, it's a 3.41 to 1 risk reward, because why? Well, our stops are down here, target's way up here. All right, so there's different risk reward when it comes to setting out your tool. And this is why I like this tool so much, is because you could set your tool and you can actually right click here, and then you could create a trade here. Okay, you could buy or sell here in this little market instead of pressing these two, having orders. Okay, there's market orders, there's limit orders, stops, stop limit. I don't mess with stops or stop limits. I'm just going to show you two for right now, just so you guys won't get too confused. A market order, okay, makes you get in an order immediately where price is at. Okay, so if I go ahead and buy the market here, it's going to get me in exactly right where price shows you, right here at this level. If I do a limit order, right, so it's going to show you this little screen here. I'm going to bring this down. So when I press a buy this, when price comes down to this blue level here, it's going to enter us in the market. So right when it reaches this level here, it's going to come down. Price is going to hit this level. Boom, you're going to enter here. Okay, right here. Instead of entering at a market order, which would be at this specific price. If you want to enter at this lower price, and you can. You always can, right? So pretty cool. Though that's how those two work there. The specific types of market orders. And yeah, so with that being said, when it comes to trading, guys, we want to make sure we have a broker. All right, so when it comes to having a broker, guys, what you want to do is go down here to this little panel. It shows stock screener, trading panel. Okay, we're on the trading panel here, and it shows us a bunch of brokers here we could open up an account with and deposit money so we could get started to trade, right? So we have AMP, we have Mumu, we have a bunch of stuff. I used Owanda and Trade with 8. If we just type in any key in our keyboard, I'm going to type in a T, boom, this search symbol comes up here. This is going to show us our markets. Okay, we could, of course, look for a stock, but these are our markets. So we have the stock market, we have mutual funds, okay, we have futures, okay, the futures market, Forex, crypto, indices, bonds, economy, and options. Pretty simple. So we got all those different types of markets, right? So if I want to trade Forex, then cool. Here's all my Forex pairs. So we have a euro, US dollar. For me, I only trade futures. So let's go back here. Let's go on futures tab. And there it is. There's our futures. So if I press this one, there it is. We're on the futures, right? So if I go down here and I'm going to do research and I'm going to see which broker is the best for me. For me, it's Tradeovate. So I go ahead and press it. And yeah, for right now, you could always practice trading by paper trading. So if I go ahead and select paper trading here, you connect it. So it shows us now we're in paper trading right down here. And now this is when you fiddle around and you can just go ahead and try to practice a trade. So if I press buy, right, boom. Now we're in with our paper money. We can't just place orders in, right? We can't just place an order in. And the reason why is because it's gambling. You want to have confluences why you want to get in a trade. Well, price came down here and the indicator shows it crossed, the lines crossed. Well, cool. There's a confluence. That's your strategy. So to close your position, if you're in a trade, you can just press the X button right here and it closes the trade for you. Okay, boom, there it is. So that's exactly how you go ahead and put market orders in the markets and how to actually have a broker so that you could actually get started trading. So when it comes to trading, guys, I want you to understand there's so many things in a strategy you could align. I want you to have more confluences. So right now you can't really build a strategy yet because you don't know enough of confluences to add in your trading. I'm going to show you a few techniques you could do and use in your strategy so that you could actually set up your strategy or use an existing one like I have on my channel, what I post, and actually get started trading purely off your strategy. I'm going to show you a series of 3 candles, okay? I'm just going to highlight these candles here. I want you to look at this one, and this one, okay? So this first candle here, okay, is an up candle. Okay, this one right here is an up candle. This one's a down candle. All right. So basically, when it comes to price, there's a lot of orders being filled. Okay. When it comes to this big, large one, when there's a lot of orders being filled, that's why price pushes up so hard. It's because it's filling in all those orders. The stocks is moving like crazy, right? A lot of volume. It's called a lot of volume. There's a lot of people trading. It's called a lot of volume. Okay. So when you have this huge candle, sometimes price needs to come back to this area, come back down to actually fill a gap. This is going to be our candle number 1. Okay, let me highlight this. Number 1, number 2, and this is our 3rd candle. Okay, so we can go on our first candle here. All right, I'm going to go to the top part of the high. Where's a high of our candle? Well, it's not the close, it's the highest part of a candle. The close is here, right? Because the up candle, open and close. But the little stringy parts is our high. So I'm gonna take the line tool right here. I'm gonna identify the high. I'm gonna press shift and it drags perfectly straight. You see that? If I'm just doing it normal, it's not straight. Okay. If I press shift and hold and drag, it actually goes straight. So I'm going to draw a nice little line from the high right there of that candle. Now I'm going to go ahead and go look at the 3rd candle. So the first one, you're looking for the highest point of any color candle. And the 3rd one, you're looking at the low. Now let's do the opposite what we just did. I'm going to drag this line across. So we got one here and one here. So what is this area called? I'm going to go and do the low of the first candle to the high with my box tool. Right, with my box tool right here, I'm going to highlight this area. Let me change the color. Okay, this is called a fair value gap. Okay, so this shows is a gap of orders because the price pushed up so fast. There's a lack of orders. What does price do? Price comes back into this zone. So let's go ahead and look at one here. So we have these 3 series of candles again. We have these candles. Boom. What are we looking at? Well, we're going to go ahead and look at the first part of our first candle, okay? Where's our high? Well, there's no wick part here, so it's actually just our close. We're going to bring this over here just like this, okay? And now we're going to look at the 3rd candle. Where is the lowest part of the 3rd candle? Well, it's right here. We're going to go this the opposite way, and boom. This right here, guys, is called a fair value gap, okay? This is where price is actually going to come back into because the reason why there's a gap here is because price jumped up in a short period of time, right? It has to come back down and fill some of those orders in, okay? So that's called a fair value gap. That's a confluence you could actually add into your trading. I'm going to give you a little strategy right now. I'm going to go ahead and search in the moving average, okay? And then I'm going to go ahead and just replay this wherever. Price, right? Created these 3 candles right up here. Okay. On the first candle, created this. And this one right here. We have a gap here. Look at this. We have a gap. Okay. We have a nice little gap here. So we have a nice little gap here. Okay. Price created a low, right? Remember this EMA we added on earlier, guys. Okay. Look at this. Is a strategy I'm building just for you. Look at this. So price came below this line, came up, it broke the line. Okay, which it then made, what did it make? Well, it made this fair value gap. Price comes back down because it has to fill in these orders because price jumped up too fast. Price comes back down. Okay, now right when we see a break here, now we go ahead and select a buy right here. Let's do a 1 to 5. Okay, what does price do? Well, free. Go ahead and wait a minute. Boom, price pushes up. Right? And does it hit or take profit? Let's see, guys. Does it hit or take profit? Yes, it does. Boom. There it is. And there's a strategy you could literally align right now. What I just gave you right now was a strategy you could implement into your trading and use proper risk management and consistency, guys. Oh my gosh. You're going to be making so much money, guys. So we had a low here, right? I put the EMA line on, okay? We had a break of the EMA line here, okay? We created this fair value gap right here. Price came back down into here, okay? And then price pushed forward, okay? Right when we see price come back into here, I'm going to go ahead and select a buy. You wait for a low, and then you wait for a break of the EMA right here, and then so mark out fair value gap, and then what does price do? Well, then you go for a long position / buy position. There is your trading plan. So there it is. There's your strategy. You're going to wait for a low in the market. Right here we had a low. You break of the EMA line right here. When these candles came up, it broke this EMA line. Okay. Then we mark out this fair value gap. We wait for price to come back down in here. Boom. We go ahead and go long here or in the middle of our fair value gap, anywhere you want. You could even go down here, but it's too risky. I would always put it in the middle or at least up here. Okay. So there it is, fair value gap, and then long position, boom, for 1 to 1.2. So when it comes to trading, guys, right, of course, we want to wait for the low in our strategy, but we want to know, guys, that there's a thing called liquidity, okay? What is liquidity? Well, liquidity is just basically in high and low where price is more attracted to. And if we go on a higher time frame, let's go on the 5-minute time frame, guys, okay? Okay, we're on the 5-minute time frame. What do we see? Well, we have, look at this low here and this low here. I want to identify the lows, okay? These are our lower side of our liquidity, okay? Price is either going to come down and hit these first or this high, and this high. Okay, price will either come up here to these highs first or come down here to these lows. All right, so basically for me, what I'm mainly more attracted to is for price to actually come up to these highs. And the reason why price will come up to these highs more is because you see how there's more highs, right? Not only there's more highs, but they're kind of more relatively equal to each other, right? Like their bodies are pretty equal and their wicks are a little higher than others, but their bodies are equal, and I find that as a liquidity point, it's called. So this is where people have their stop orders at. So price has to punish the people with the obvious stop losses, okay, in the markets. So for the people that went short right here and they have their stops either here, here, or here, they have to get punished by the market. The market wants to punish them. And basically, the banks are out there, right? So when you're trading, you're actually trading. It sounds scary, but you're actually trading against banks and big retail people out there, right? Okay, the market is going to show you right here that, okay, it wants to punish these people because why? Because they have an easy stop loss to hit, right? So pretty simple. So if we go down the 1-minute time frame, where does price go to? Price, let's see. We'll go to the highs or the lows first. I'm going to assume the highs. Yes, boom. Look at it. Goes straight to the highs. See that? Stops out. Somebody down here stops out. Multiple people in this zone here. This line here, this line, this line. These are all where previous stop losses were. Those people have to get punished if they didn't take profit down here. Okay, pretty simple. Last but not least, guys, what we're going to look at, there's 3 different ways the markets actually move. Okay, so the first way the market moves, right, is by an uptrend. So an uptrend is what? Well, we have a low in the market, then we have a high here. Okay, we have a higher low, then we have a higher high here. We have a higher low. We have a higher high here. Can't we say this market's an uptrend? Yes, it is. It's an uptrend. So price, we know price is likely to go up, okay, from this level, which then it keeps going up, right? Our second way markets move is by a downtrend. So downtrend is what? We have a high now, then we have a low, we have a lower high, we have a lower low, we have a lower high again, we have a lower low. As you guys could see, lower low, you guys get the point. We're in a downtrend. There's 2 ways the market moves right there so far, a downtrend and an uptrend, but we're going to go ahead and look at another way the market moves. Okay, so another way the market moves is called a consolidation area. It's stagnant. It literally just stays in a Pacific zone and stays there. You guys see this? So we have a lows here. We have a high. We have another equal low here. We have a lower high here. We have a higher low here. We have a higher high. Where's price likely to go? Well, freaking stagnant. We cannot trade off of this. So for areas when there's consolidation, I don't trade, but there are people out there called breakout traders. So basically when price actually breaks out from a point, so from this low, right, price breaks out of our zone. Now we go ahead and go short here, which is what people do. They go short and then take profit down here. Every strategy doesn't work 100% of the time, but it's all about defining your own personal style when it comes to your trading. Let me know if this was helpful for you. Hit the like button, hit the subscribe button, guys. I'm here with you all the way. Hope you guys enjoyed this video. You guys learned so much. Now you're capable of making money in the markets. And all you got to do is put in the work. Have a great one. Trade on. Peace out.